Mr. Vinals, if we talk about the banking sector and exactly what we've lived through in the last 12 months, Standard Chartered started this hybrid working from home model. How's it working?
Well, it's working very, very well. We bank in about 60 countries throughout the world, and we have had to adapt to the different local conditions. At one point, we've had about more than 80% of our global staff working from home. And thanks to technology, thanks to the excellent adaptability of our workforce, and the human resource practices that we have put in place at the group level, that has really worked very well. And it has been critical in allowing us to maintain our operational resilience through this very difficult year that we have just concluded.
Given the very difficult year, Mr. Vinals, how's the restructuring at the bank going? Are there any more jobs that will go?
Well, we have been undergoing a structural transformation already for quite some time. And as a result of that, a small number of roles are made redundant. So this is a process which is not new. It's something that has been going on and will continue in the future. But it's not related to the pandemic.
When you look overall at different regions and the speed at which they're growing again, or the speed at which they've been able to get back on their feet, what does it mean for Asia versus Europe versus the US? Is Asia so far ahead that it'll be very difficult to catch up?
Asia, particularly emerging Asia, led by China, has been at the forefront of the global economic recovery that we expect to see strengthening as the year advances. So I think that puts Asia, and particularly Asia Pacific, in an excellent position. And if you look back, emerging Asia, excluding Japan, has been contributing more than 60% of global growth over the past decade. This is something which I think is likely to continue going forward, even if advanced economies are set to recover. But I think that the key contribution of Asia will continue.
Mr. Vinals, how are you expecting the new U.S. President, Joe Biden, to deal with China? And does that change the environment for business?
I think that one should expect a lot of continuity, in a sense, in the U.S.-China relations. The rivalry will continue, but I think that the form in which this rivalry will be administered will be different, with a more multilateralist approach and more predictable approach on the part of the United States. And I think that's going to bring more stability to the relationship. The United States, under Biden, is not going to get easier on China, but I think is going to try to bring China to the table together with U.S. allies to discuss things which are very important for them all. One advantage of this approach is that we're going to see much less scope for accidents and misunderstandings. And I think that this is very important for the world, even if the rivalry relationship will continue. And I think that this stability would be very good for everybody.
How concerned are you about recent developments in Hong Kong?
Well, Hong Kong will continue to be a very important international financial center. There are tensions there, but we have been very supportive of Hong Kong as a place to do business. And what we hope is that calm can be there for the medium term, and we will all benefit from it.
Give me a sense on, Mr. Vinals, about the sort of dividend payment that you're looking for in 2021 compared to last year.
Well, we will abide by the constraints that have been set by our home regulator, the Prudential Regulatory Authority in the United Kingdom. So we will we will consider this in our board shortly, and we will do as much as we can. Our intention at the board is to do as much as we can, given these constraints, in order to resume the path of distribution of returns to shareholders that was interrupted last year because of the COVID crisis.
Mr. Vinals, there's also been speculation about a succession plan for your chief executive. Can you update us on that?
Well, succession plans are good governance in any organization. And we have had BAU succession plans well before I came in for the chief executive of the bank. But let me tell you that he's fully focused on executing the strategy. Bill Winters has said that he's willing to see the strategy through. And he's very passionate about the bank, and we are delighted with him. So there is nothing else than that.
I know we're jumping around. There's a lot. I have little time and many, many questions. Maybe talk to us also a little bit about Brexit. How's that been going so far? What are the most obvious teething problems that you've seen?
Brexit is difficult for both the UK and the European Union. The good thing is that there was an agreement on a deal. Unfortunately, that is something which does not encompass the financial sector. And one of the very important things going forward is going to be what kind of agreement will the UK and the EU be able to achieve in order to smooth things out. I've always been a proponent of keeping a very close relationship between the United Kingdom and the European Union, even after Brexit, as close as possible. But I can also understand that there may be some areas on the financial side where the UK may want to seek divergence. But even if there is divergence on some areas, I think it would be important to be as close as possible in many other domains. I think that's in the interest of on both sides.
Has Brexit had an impact on your business yet?
Not really, because we reacted with a lot of anticipation to Brexit. And already for quite some time, we have been operating our bank in Frankfurt since, the first half of 2019. So this has allowed us to provide continuity of service to our European Union clients. And therefore, we have been operating things quite smoothly.
Mr. Vinals, maybe, if we finish the interview by me asking what kind of recovery you're expecting. I know it's very difficult, to see the vaccination, the rollouts, different countries going at different speeds. But are you more optimistic about 2021 in terms of health and kind of general economic recovery than you were 2 months ago?
Well, I think that we have discovered some realities and difficulties in the process of vaccination, also in new waves of the virus. So there is this race between the virus and the vaccines, which is going on. And I do hope that the vaccines will prevail over the virus. But this is not going to be immediate. There are going to be bumps on the road. And certainly I see a current year divided into two halves from the economic point of view. The first half, because of the health uncertainties, this is going to lead to an economic situation which may be not too dissimilar from the one we saw in the last quarter of last year. But then as the year advances and vaccination prevails over the virus, I hope that in the second half, we can see a return to confidence, more private spending, and therefore to have a stronger economy. So overall, I am cautiously optimistic that we will have a better 2020, both in terms of health and the economy. But the beginning is not as easy as we had anticipated about 2 months ago or so.